Let's start with your word of the day.
My word of the day is rotation, Frank. And even in a week like this, that was quite volatile. I think that's the theme that keeps peaking up in this market that I've been joking is the paddling duck market. Looks calm and smooth on the surface, but you have those violent rotations underneath, and this week was no different.
All right, no different this week. So with all this action we saw specifically on Monday with the DeepSeek sell-off, what are we seeing when it comes to the options market? How are investors trying to play some of this uncertainty?
Look, you really have seen hedging demand pick up. This is true not only for NVIDIA on a single stock basis, it's also true on a broad-based indice basis. So when you look at S&P, you look at NASDAQ, institutionally, one of the first things we saw happen after the DeepSeek news was folks buying NASDAQ puts. Essentially, I think the psychology is people are pretty long all the AI names. They've always been worried about this concentration, even though hedging got more expensive. They still wanted to do it, and we continue to see that on our side.
All right. We have NVIDIA earnings coming up in just about 3 weeks from now. What are you saying specifically when it comes to NVIDIA? That stock really rocked by the DeepSeek news and the idea that maybe advanced chips won't have as much demand as we previously thought.
Yeah, there's an old saying in options, which is hedge when you can, not when you have to. But that's not what the derivatives market has been doing. They've been hedging when they need to the most. And unfortunately, that means the cost of protection is more expensive. That's true in NVIDIA, but that has not stopped people from trying to protect against this earnings event, which is in 2 weeks, as you mentioned, either through NVIDIA puts or put spreads directly or through NASDAQ options. So you see hedging demand in both rising, Frank. But at the same time, the rest of the market remains sanguine. And that's why we kind of call it a paddling duck market, because you still see strength in the broadening trade. You still see other pockets doing well. And overall, VIX levels still are psychologically below that 20 handle.
All right. So you're saying there's a lot of paddling under the water. I want to talk about something that's under the radar. You have our pick for us today. It's a trade that's kind of under the radar recently.
Yeah, it has been. I feel like it's been forgotten a little since 2025 began. People have been so focused on tech, but I like looking at IWM. So that's the Russell 2000 ETF. Call options. One of the reasons is in all this hustle and bustle we've seen this week, very volatile week, those option prices actually remain pretty okay. Most of the focus and concern obviously has been in tech. And then the reason to look at upside there is one thing you've really seen this week is people do want that broadening trade to work. If you look at S&P equal weight, that's kind of where the rotation went when you saw concerns in market concentration.